Hello, this is Matthew Copley with Copley Financial Group, and we're here today to give you a market update, probably a pretty important one considering what's going on in the world and the big drop in the markets. The S&P 500 is down 14% from its high. The NASDAQ is down 21%, and the broader Russell 2000 is down 23%. These are some big drops, and normally when we see the stock market drop like this, we usually look to get more aggressive, to buy back in, to take some of those hedges off and buy into the market and make money on the way back up. But we're still not quite there yet. The momentum is still pretty bad. There's still a lot of recession indicators out there, and obviously the situation in Ukraine and Russia is still ongoing. And so I think there's a lot of concerns that the market could continue to go down from here. And of course, we're not down those kind of numbers. And the reason is obviously we've got hedges in place to protect our clients' investment accounts from a market drop. But we also have been overweight in areas that have done very well in this environment. So things like energy and agriculture and gold. Precious metals have done extremely well in this environment. And the price of gold just recently hit an all-time high. We're above $2,000 an ounce now. And a lot of people think that the price of gold going up is because of what's going on in Russia and Ukraine. And I actually believe that the price of gold would be higher if it wasn't for Russia and Ukraine right now. And the reason for that is when you have a situation like this develop, there's a rally in the dollar. So people flee to safety. And when there's a rally in the dollar, typically gold does very poorly. The price of gold goes down when the dollar is strong. And so the fact that gold is hitting an all-time high in the face of a dollar rally tells me that the real story here is inflation. And we actually got new CPI numbers today. Inflation year over year is up 7.9%. Those are the official numbers, if you believe those numbers. But 7.9% is extremely high. We haven't seen this kind of inflation number since really the early 1980s. And these kind of inflation numbers are having a huge impact on the economy. When you look at prices for goods, it's not just gold. Everything's going up. The price of oil is just hitting really high numbers. You're seeing price of wheat. Obviously, 40% of the world's wheat is actually exported out of Ukraine and Russia. Most of that goes to Asia and Africa, but it's going to affect the price around the whole world. And it's not just food and energy. We've got copper prices, nickel prices are double what they were. And it's interesting because all of this push to green energy and electric cars, one of the things you need a lot of to make an electric battery is nickel and copper. And so when the prices go up, it's going to cause prices across the board to go up. And the other thing that is a real problem, and this is a recession indicator, is that when you have increasing energy and food prices, people have to eat, they have to put gas in their car, they have to heat their homes. What that's going to do is it's going to divert money away from other areas. And so people will have to put more money into food and energy. They're going to spend less money in other areas. And this is going to cause a recession. It's going to cause prices on other things to go down and demand to go down. So this is a real problem. And some of the other areas that we're seeing as far as recession indicators is deficits, $89 billion in deficit spending. You see mortgage interest rates. The 30-year fixed rate has really come up, and this is having a serious impact on the housing market. You can, by the way, follow mortgage interest rates. There's a website called mortgagenewsdaily.com, and it's actually interesting. The current interest rate on a 30-year fixed is about 4.25%, and this is up from below 3% just 6 months ago. So that's having a serious impact on the markets, on lending. And so I think there's still a lot of potential for downside in the market. So we're not excited about getting aggressive yet, but we are going to continue to invest in the themes that we have been investing in, which is high quality value stocks, dividends. We're looking at energy, agriculture, precious metals. I think that some of these precious metal stocks are really a good value right now. If you think about the price of gold back 10 years ago when it hit $1,900 an ounce, and you look at the price of the gold mining stocks and compare it, the big gold mining stocks would have to go up 70% just to get back to where they were when gold was at 1900. And some of the smaller gold mining stocks would have to go up 200 or 300% just to get back to where they were. And the price of gold's over $2,000 an ounce. Now, I will tell you, in the event that there's a resolution in the fighting in Ukraine and Russia, we will probably see a drop in gold prices. We'll probably see a drop in oil prices temporarily, but then I think they're going to go right back up with all this inflation. By the way, the situation in Russia and Ukraine is really interesting. I'm trying to look and see if there's going to be a resolution in this and kind of what sparked it. And it's really interesting. You won't find this on any of the mainstream media, but there was actually a conference on February 20th. This was a security conference in Munich. And at that conference, Kamala Harris was, I guess, the representative or over there at the conference. And she blurted out during this conference that Ukraine should join NATO. And this is a real problem. And I think this may have sparked kind of everything that happened. It may have sparked Russia invading Ukraine. And it's an interesting history if you understand the history behind it. After the Soviet Union collapsed in 1991, you had Ukraine was actually one of the largest holders of nuclear weapons in the world. They had more nuclear weapons than China did in 1991. And so there was an agreement that was made. The United States and Russia came to an agreement. It was called the Budapest Agreement. You can Google it and read all about it. But this agreement was that Ukraine would give up all of its nuclear weapons, and the U.S. would not allow Ukraine to become part of NATO, and Russia would stay out of Ukraine, and everything would be just fine. And of course, part of that was Russia had control of Crimea and so on and so forth. And so it was an interesting history, because when Kamala Harris said that Ukraine should join NATO, I mean, this is clearly a big violation of that Budapest Agreement. And I think this may have been what sparked a Ukraine invasion. And so when you start looking at the history of that and what's going on, was it intentional? Was that intentionally the cause? I mean, I'm sure there's a lot of conspiracy theorists out there that say it was intentional, that it was designed to create a war. But honestly, I think it was probably just an error. It was a mistake on her part to mention that. And that may have been the spark. It seems like right after that is when Russia decided to start doing the invasion. So interesting history there in Ukraine and what's going on. Hopefully we get a resolution in this very, very soon. But at this point, when you have Russia refusing to send fertilizer out to Europe, and all those European farmers need fertilizer to grow their crops, I mean, this is going to be a problem. And the longer this lasts, the more of a problem it's going to be. And we're already seeing it, obviously, at the gas pump and in the grocery store, and this could get a lot worse. And I honestly believe that even if there is a resolution in the Ukraine-Russia conflict, I think that we will continue to see inflation. There may be a temporary reprieve, but it's just going to come right back. There's no way the government can get control of the current inflation rates without raising interest rates substantially. And I just don't think that they are willing to do that because it will have such a negative impact on the markets and the economy. So I believe they will continue to let inflation run hot. We will continue to see higher and higher prices, and so we need to be invested to protect you from inflation risk. So that's what we're doing. So I hope that was a good market update. Hope it gave you a little insight on what's going on in the world and what we're watching to protect your accounts in the face of all of the craziness that's going on in the markets.